There is a substantial risk of loss associated with trading forex, binary options, stocks, or equities, collectively, asset classes. Only risk capital should be used for trading. Trading in any asset classes is not appropriate for everyone. Past performance is not necessarily indicative of future results. No representation is being made that investors will make profits, or will not sustain losses. Before trading in any asset classes, investors should consult with their professional broker, financial advisor, or financial consultant to determine whether trading asset classes is appropriate. Investors who trade in any asset classes should only do so if the capital used for this purpose represents funds that an investor can afford to lose without adversely impacting the investor's lifestyle. No trading strategy or methodology is without risk of loss. No trading strategy is risk-free, and no trading strategy can guarantee profits or freedom from losses. Investors risk losing the cost to execute any transaction, including associated commissions or fees. You should carefully consider whether trading in any asset class is appropriate for you in light of your investment experience and financial resources. Any trading decisions you make are solely your responsibility and at your own risk. None of the statements or materials in the Auvoria Prime chat rooms constitute a solicitation or recommendation to buy or sell.
Welcome, Auvorians, to the new Tuesday cast. I say new because I haven't done it in about 4 weeks. Tried to have some content which I primarily just deliver on Saturdays, but we'll let our Tuesdays get back in action now. What you guys should be seeing, and I have this set up a little bit different from my office setup at home versus my office setup in the office, but you should see forexfactory.com calendar up, looking at the week of January 22nd through the 28th, which I addressed a little bit on Saturday, but I'll just go through some of this again, just some of these news stories. There's really not a lot in the U.S. this week other than advanced GDP, as you can see here on Thursday. But the Friday is really where I want you guys to pay attention. So this is the big one, okay? This is probably bigger than non-farm payrolls. Right now, it's equally as big as almost any CPI index coming out of any developed market right now. So those are the ones you want to focus primarily on. And I talked about this, went over a fair amount of stuff. I'm actually going to do a slightly deeper dive on the US dollar GBP pair today. Just go over just some high-level stuff. Talked a lot, not much has really changed from the broadcast I did on Saturday, so revert back to that, please. I have presented multiple topics on this over the years, so there's always something that could be had that's good coming out of the Saturday podcast. So whether you're looking at it on the Vimeo channel or YouTube that you're linking to. So that's kind of it for news. Let's talk about trading views. So I have really no affiliation with the software. You can use whatever you want. But I like the idea of TradingView. This is based. I wish I could own stock in this company. Let me just say that, because this has been just one of the fastest growing software, at least related to general market technicals and all. They keep adding all kinds of great stuff. And hell, I mean, as many of you may know, a Bloomberg terminal costs anywhere between $1,600 and $2,200 a month, depending on your firm. Right? It's massive money to get a colorful keyboard. Now yet, it is basically like buying a full trading desk, and it is more of an institutional setup, obviously. But I'll tell you, from at least a charting capacity and all of the indicators in the community, which is the thing I'm going to address today, is growing a lot. So this isn't necessarily just, and I normally don't, with the exception of Investor RT, which I'm sort of connected for on the market profile and auction market theory space. I typically do not make recommendations to brokers and stuff like that. But in the case of TradingView, it's great for just the everyday person. It's great for retail traders. And I use it a lot, as you can see. You see it all over my stuff. Because it's easy. You know, you can add all kinds of indicators. You know, you can buy a pro version or a super pro version that gives you more than 10 indicators to have on one chart, which I have on a bunch of other charts. And I guess at some point I probably need to upgrade them. So, but just looking at the S&P here, as I talked a little bit about, we're in a consolidation. Typically, you'll see, at least as far as global equity developed markets, you will usually see an influx of capital in the first part of the year. This is a lot from just bonuses and extra, money coming into 401ks in the form of either profit sharing or stock option grants. So that's something that will show up oftentimes in January, and that usually has a levitating effect to the market. So we were in a tight range here. As you can see, each of these candles represent a single day. If you want to expand the range out or whatever. But I mean, just taking a quick look at this for purposes of analysis, we have the ranges that are identified, at least from the value area perspective, on volume. I should say aggregated volume. At the high point here, 41.35, and the 37.20 area on the low. We got the center point, which we've been trading around a lot. Notice that if you look at this on a bigger picture, it looks like this whole thing is just flagging over the last week. So I don't talk too much about that. I'll just kind of show you guys some of one thing that can be helpful. I'm not condoning nor am I recommending any of this, but I will always take a look at the community awards, and every year, because one, I don't have the time to peel through the ridiculously large community that TradingView has become. I can use the awards to find maybe indicators and technical analysis tools that can help cut the learning curve, right? Remember, I always talk about that from a student perspective. In the old days, I told students, look, what I'm going to teach you is not the holy grail of trading, but I can help you cut the learning curve by 2/3 if you put the work in and go through the course and spend screen time. And for those of you out there that may not know this, one of the most important things to any kind of long-term trading career is, one, be a sponge, leave your ego at the door, obviously. Make sure that you spend a fair amount of time on you from a mental capacity. I don't care if it's working out or lighting a couple of candles and getting in your Zen moment or any kind of meditation or whatever works for you. I would say do all of the above, right? But the key is get yourself in that emotional mindset. But more importantly, having the right tools for that as well. Turn this. Phones are ringing off the hook today. So let me just close this out. Turn off the meter ringer. There we go. So, the community awards, and there's a lot of criteria as to why this gets put out, but cool thing is you can see, and I'm going to link to this in Telegram if you guys want. Take a closer look at it. I'm going to paste that right into Telegram. No, we don't use this as much anymore, but I could still post it to the channel, which here we go. It's TradingView Community Awards, as mentioned on the call. Just different programs, in some cases good chart patterns. Some of these people spend a heck of a lot more time in trading. They're a lot smarter than me. They can bring some great ideas to the mix. As far as price action, this is actually pretty good. So here's top key 20 patterns. It's like a cheat sheet. You can make these things big, by the way, just by clicking on it. It's actually pretty good. So I have something like this up on, I actually like this piece a lot. Let me see if I can save it or share it, right? I know. I guess I could always do a screenshot. I'll post this for you guys as well. I think it could be of benefit here. Anyway, but just go through this, take a look at some of this. This is really some good content. Look at this. 7 guilts in trading psychology. I like this. That just goes through a long list of everybody that got the awards and all that fun stuff and all that. Can help you with your trading. It can help you understanding patterns to break out and so forth. I always tell people, in students and anybody that wants to become a student of the markets and or a trader, really it behooves you to get the views from lots of different people, right? So it's not all about the Steve show or the Auvoria show. I mean, there's plenty of good shows out there that can help you a lot with this, because as great as the Auvoria algos are, in many cases they're just sending signals, depending on the country you're in, sending signals into you to execute trades. And then you must go do that. So, it would just be like, hey, I'll use the F1 analogy here. Hey, I'm going to, put you in Team Mercedes Indy car or Team Mercedes F1 car, and I'm going to let you spin yourself around a track, see if you can win the race, right? Most people, even though they've had a little bit of instruction, they'd make it to turn one before they just crash in a wall and kill themselves, right? In trading land, that means blowing out your account. So just like you get handed a sophisticated race car to manage, it's the same thing with your trading. Take it the same way. You can use whatever analogy you want, but the key really is, in my opinion, is having the technical acumen, as well as having the psychological calmness, inner monkey stuff I talk about, right? And those are two of the biggest. And then a very, very close third is understanding position sizing, and understanding what that, because I could teach you to race with the best team and everything, but if you could be like an awesome driver, but if you don't know when to hit the gas or hit the brake, again, you're crashing into turn two. So I don't want to see that for anybody. I can tell you that, and you guys aren't going to want to hear this, some of the best traders that I have met, not only do they have the fortitude to sort of, push through all of that, and have, all those qualities, but in many cases, they blew up accounts 10, 20, 30, 100 grand in the early days trying to figure out this whole thing. So, as I'll often joke, we don't want to see that happen. Obviously, just do your own due diligence and have that play out. But just understand that there is a certain amount of victory, I guess I should say, that can come from serious defeat, right? Many of the best teams in any sport globally have spent what I would imagine to be a fair amount of time in defeat, and a heck of a lot more is learned about the team and oneself in that defeat. So embrace it. Yes, it stinks. You can always go back out, God willing, make more money and come back to the game. So that is the community. I'm going to talk a little bit about GBP. That's everything I want to say on the Forex Factor calendar here. Alright, so let's go into this. I'm going to show full screen here. This is a little bit of a different screen. We've got some of the fib numbers on this chart, and just a couple of key points with this. So GBP, as you guys know, record low, essentially a parity, damn near, right? Down near that whole debacle last September in Q3, hit the low, and it's been rising ever since. Really couldn't find enough buyers to sort of pierce through that December high of 12 or the 1.2445 right there that you see. So essentially it finished Monday's session with mild losses at 1.2375 and so forth. But it looks like the bulls may not give up a battle, as the clear trajectory in the RSI and MACD, which I don't normally show much of, but I am taking a different look here, is persistently showing buying interest, right? So I don't use a stochastic oscillator, but it is noted here on the chart. But if you just looking for encouraging signals, the 50 and 200-day simple moving average lines have logged a golden cross recently for the first time in more than 2 years, indicating that potentially it's strengthening. And it looks like there could be somewhat of a cup with handle forming with that 2445 area high that we sort of ripped up into and then backed off, and now maybe possibly breaking out above that. So from at least the rules of an investor's business daily, your breakout point is right around that 2445. Well, Steve, why wouldn't I want to buy it lower? Yes, but just understand the statistical significance of a potential to move higher unabated comes from a breakout point, right? Whether it's higher or lower on a chart, in this case we're illustrating something higher. So essentially, if you're looking at the cursor on the screen here, this is the cup. Ideally, you'd want to see a handle form with, well, I don't have any volume on this, but you'd want to see a handle form with as it dips down a little bit, with a declining volume, okay? Doesn't necessarily mean that it's going to break out above this and start projecting higher, but I can tell you if it does break out and the volume does follow you do now know that that golden cross carried some strength, and a more forceful move above that high could lift prices straight up into May's resistance zone of that 2665 area, essentially where there's a steep ascending line drawn from the low, which you can see here with this black line that I've illustrated here. Kind of looks like an Andrews pitchfork, but I did just a different ways. But you know, you got the fibs on there if you want to see them. You know, all I really ever do in these charts, and I don't care who designs it, whether it's me or it's, you know, some other top guy that's got charts posted on TradingView or whatever platform. The key is just having things correctly charted, one, but having areas of confluence to look at and groups of things that are coming together to form a potential higher move. Okay? And obviously, for any of this to play out, the continued weakness of the dollar has to persist, period. So on the downside, any closes below that 2320 area, okay, right in this area here, it could squeeze all the way down to that 2100 area as well. So just know that here. Maybe this is easier illustrated jumping back to my normal chart, but I figured I'd show it to you guys in slightly different ones. So all in all, I would expect this to remain attractive to buyers in the short term. So any extensions obviously above the high. Look for a move up. We can't get above that high with gusto, if you will. Remember I said the other time frame players need to come into the mix and continue to show that they don't really care about small time frames. They're moving this into a new area. You want to be on the coattails of that move, you know, and that's going to come first, as I always talk about, like looking at the dollar index first, right? Now obviously it's not completely correlated with this, but it is an idea of at least its strength in relation to the other majors like the euro. What else do I want to address? Looking through my notes. Yeah, let's leave it at that. So I think I'm going to look at, no, I don't think I have time. Yeah, I'm just going to leave it at that here. Close all these systems out here. I think that's pretty much everything I want to say. I have like a million windows open here. Alright. What else do we want to look at? Here is the euro real quick. Let me show this first. So, arguably we should not have too much of that data in, and we want to probably cut it about to right here, by the way, so hopefully we can get that to back up. Okay. So, arguably, this could be always based on data. Trying to just have alright. I guess if you play around with this enough, you can always get these profiles to look the way you want them to, right? So that's sort of the, but all I advocate for is if you're looking at the entire blue groupings on the left side of the screen here, again, this is a volume profile from the market profile concept. They use this a ton. I think this is one of the best indicators, period, on this planet, provided it is used correctly, and that's a big provided. A lot of people that teach this do not use this set up right. And what do I mean by that? I want to see all, as you can see here, of the volume aggregated data for the entire range, right? And this spans, for this particular major, this spans all the way back to almost a year ago. As soon as we start to break into a newer, lower zone, I want all that data. Why? Because I want to see where all the executions take place, right? As I talked a little bit about on Saturday, which I absolutely hate, I consider most of the level 2 crap that you see on a trading dome to be fairy dust, right? It's like fake news in trading land. Why? Because it's all kinds of flashing going on and BS, and it's just games. I'm not into games. I want to see where the institutional traders traded, right? I want to see in the aggregate, where did they all actually put their money on the line between institutional and retail, right? And the answer is, in this entire lower zone, of which we're now at the value area high, by the way, was right here. This was the center point where all the main volume, the highest trade volume, took place at this 105. No surprise that this is also support from a strength. So this is that real, I talked a lot about this Saturday, but you always get a little bit of a different angle if you're looking at data. So I could play around with these dates here and get it exactly right, but I just generally want to see the data, and then you can encompass all of the previous data. See now, but this is from a higher level. So you're now, it's almost like you're muddying the waters of the lower ranges volume data in the aggregate, right? I just want to look at it separately. So if that's the case, you can actually put, and at least in the other software, you can draw a whole square around it, and it'll build a profile for just what you draw around it, right? Which is one thing I just love about IRT. So very quickly, and then you can pin profiles to different periods. You see a lot of people pin it to just this range, which is fine. Pin it to this range, right? But you're getting a smaller subsector of volume data, whereas you're looking at the whole shebang from a bigger macro picture. Doesn't mean you shouldn't drill down into it, especially if you're trading smaller time frames, right? But the intraday profile, all the way out to something that encompasses, in this case, a year, just provides a lot more data, right? It's a lot more solid that one can make decisions based on support and resistance levels. So that is the broadcast for today. My name is Steve Vetterl. I hope to continue to serve you guys in a risk manager capacity. If you got any questions, you guys can hit me up on all these windows open here from Zoom meetings. Hit me up on the Telegram. You can also send me an email. Wish everybody a great week.